Hey everybody, Chuck Barone. It is Wednesday, October the 11th, 2023. It's PPI day, guys, and the numbers, well, this market, I gotta say, they always try to find a way to find good news no matter what the report says. But we'll get into that PPI report in a little bit. Before I get rolling, though, I just want to take a half a second, welcome everybody to the show. And as always, thank you guys for your support. It means the world to us, you guys watching these videos and hanging in there with us. We appreciate it. We hope you're finding the information we're giving you guys every day useful. All right, so let's look at these markets today. So PPI comes in, and the numbers are, in my opinion, not good numbers. As always, higher than what economists had expected. Inflation moving in the wrong way at both wholesale and retail. So tomorrow we'll get the CPI numbers and we'll see what those hold for us. But these numbers today were not what I would call good news, but the markets kind of looked at them like they were. So the stock market rallies a little bit today, nothing to write home about. The Dow advances 65 points, sitting at 33,804. The NASDAQ up 96 points, sitting at 13,659. And the S&P up 18 points, the broader market, 4376 on the S&P. So market's up, but this was not what I would call a big rally in any way, shape, or form. I think it just kind of shows the confusion in the market and the natural tendency to be bullish. The market always wants to go up unless it's given a reason not to, right? So more people want to buy stocks and go long than want to root for the market to go down. I think that's kind of what, and more than anything, you see a day like today. The bond market, however, rallies as well. So yields falling today. The 10-year falling 6 basis points, sitting at 4.59%. The 2-year basically unchanged today, sitting at 4.98%. So the inversion is still about 39 basis points, 40 basis points, 39. And yields coming down a little bit. The 2-year was just above 5%. The 10-year hit 4.9. So rates have come down on these treasury bonds quite a bit over the past couple of days even. But I don't think this is going to last long, guys. This inflation fight is not going to be an easy one. It's not like we just wave a magic wand or do like the lady in Bewitched and twinkle our nose a little bit and off we go. It's gone. It just doesn't work that way. The market wants it to be so, but it will not be so. Anyway, so bonds and stocks both rallying today. The dollar is sitting basically flat, sitting at 105.77 on the index, still a good strong number. The dollar was just, a week or so ago approaching 107, so the dollar coming down a little bit. Still the strongest, the king of the hill out there as far as world currencies go, but losing a little bit of its strength. As a result, gold and silver get to rally a little bit today. It was nice to see it. Gold jumps $13.50, sitting at $1,873.50 per ounce. Silver gains 23 cents today, sitting at $22.05 per ounce. So more than holding their own, gold and silver. I think they want to rally. Maybe not as much as they did prior, where they had their big run-up where you had gold at 2,000 and silver at 25. But there's demand for gold and silver. There's money on the sidelines waiting for the opportunity. We'll see where it goes. It's been a little bit choppy and pretty much in a negative kind of downward decline as the dollar gained strength and there was a lot of uncertainty, but it's still more than holding its own. So yay for gold and silver. Oil today comes down $2.05. I guess this whole war got digested pretty quickly. Barrel of West Texas Intermediate sitting at $83.92. Well, now we'll see. I guess oil could be pretty volatile because you're going to have news coming up out of the Middle East. Israel and Palestine, or the Palestinians, I should say, in their battle now, their war. This could draw in a lot of powers in the Middle East. You know, Palestine has their backers. They got Hezbollah in Lebanon. They got Iran, who's threatened to, get involved in this. Would not be good, guys. And that would certainly make a mess of oil prices. I was reading one analyst was saying if this war gets really hot and expands, oil could hit $130 a barrel. I certainly hope that's not the case. Nobody needs that, but as it stands today, oil prices coming down just a little bit. Bitcoin down today, down $670, 26,717. I think it's in sympathy of the Wall Street Journal headline. I'm talking about the testimony at the FTX trial, Sam Bankman fraud, directing people at the company to do fraudulent things, divert customer funds. I think that might have weighed on all cryptos a little bit today. It looks like he's toast from what the testimony, at least so far, is saying. It's going to be fascinating to see how that finishes, how much of the assets they can find, because there's billions of dollars missing, billions of dollars. So that's going to be a fascinating finish there. I think that trial weighing down on all cryptos today. All right, so let's talk about data day today. PPI numbers coming in, throwing a big wrench in the Fed's gears, man. Both the top line and core numbers coming in hot. Top line jumps 0.5% from just last month. Economists saw 0.3%. And I laugh because they talk about these numbers like these are good numbers. For the Fed to hit its 2% target, we need 0.1 something. 0.2 is too much to get under 2%. So we need numbers to come down quite a bit from here. The core basically not jumping very much this month, pretty much staying unchanged. The big problem in this report today was that the price for goods rose the fastest. And when I say goods, that usually means clothes, food, stuff we buy everyday stuff. Those prices jumping almost up 1%, 0.9% just from last month. Food prices also jumped 0.9% after falling the previous month. So this is just going to weigh on consumers. Prices are going to continue to climb, especially prices we see every day. Okay? Prices for services not going up as quickly. So that was a market jumped at that as good news. But goods are stuff we buy every day, guys. And when you see the prices continually rising in the stores, online, at supermarkets, it's hard. The government can talk and tell you inflation is under control and coming down all day long. But when you see prices on food and goods, stuff you buy every day, continuing to rise, every day prices higher, it's just going to not going to convince consumers that inflation's under control. It's going to reinforce the idea that the government is full of shit. So this is not good. Now, this report today foreshadows tomorrow, where we're going to get jobless claims, and we're also going to get CPI numbers, which the market takes for some reason much more seriously than PPI numbers. And I firmly believe that PPI translates down the road to CPI. Wholesale prices are going up. Wholesalers don't just absorb those costs, they pass them along, and then the retailers pass them along to consumers. So, I don't really see, I think that they're discounting the PPI. Well, we'll see now tomorrow when CPI comes in. If there's a spike and they really miss their numbers, okay, well then I think we can pretty much certainly figure in another quarter-point rate increase this year, likely this month. And Even with rates where they are now, guys, inflation is continuing to climb. These numbers, the market's letting us know that rates are not high enough. The economy is still too hot to bring the numbers down to Fed's target. I mean, it is what it is, right? So inflation's still rising instead of falling. And I'm telling you guys, the Fed wants to engineer this recession, and they're going to have their recession. Okay? Now, the interesting thing is they're going to engineer this recession. I think they really were hoping this year was the year. Now they're talking soft landing, perfect landing. Don't believe that crap. So now this is going to go down, this recession, in an election year. It's going to hurt the incumbent parties. It's going to hurt Biden for sure, and more than he already is hurting with this inflation numbers. So now we can expect to hear the political class starting to put pressure, criticizing, screaming at, whatever, calling for rate cuts, talking about the Fed overshooting, going to cause this recession. They're not overshooting to cause a recession. That's exactly what they want. They need to get these numbers down, man. Okay? So now, you're going to have these politicians making the Fed's life miserable. So we're getting pretty quick now, guys. Probably early next year, we're going to come to the moment of truth. The minute the Fed decides they have to pick their fork in the road, are they going this way and going to keep up the fight against inflation, support the dollar? Or are they going to go this way and give up that inflation fight and cut rates and support the economy? I think that Paul Volcker showed the way. He actually had the stones to keep up the fight and tank the economy at the expense of the economy. A very serious recession came along from Volcker's policies. They were screaming bloody murder for his scalp. Interest rates hitting 20%, unemployment at 10%. That was the stagflation era. But Volcker stayed the course. And not only did he beat back inflation, he set the stage for 25 years of rate cuts. Now, I don't know if Jerome Powell is the same man that Volcker was. But we're going to find out, because it's going to ultimately come down to that. And if the Fed decides to fight the fight, well, we know that recession is a certainty. If they decide to protect the economy, and they give in to the political class, well, we know we're going to live with high inflation way longer than we want to. A couple other little quick hits today. Crazy stuff happening in China, guys. The real estate collapse continues. Evergrande executives warning of an uncontrolled collapse. Country Garden, another giant. These are the two biggest real estate construction companies in China. Country Garden admits they don't have the money to pay their debt. So default coming for Country Garden. Collapse of Evergrande. Now we're going to see how the Russian Communist government deals with that. That's going to be a fascinating thing to watch. Government bonds, the Treasury flooding the market with bonds, $1 trillion or $1.5 trillion over a quarter. It's just sick numbers. Now people starting to fear that there's just not enough capacity to absorb all of this that fast. The Fed the Treasury putting pressure on the bond market, rates climbing as this supply of flood, this avalanche of bonds hits the market. So now the Fed feeling like maybe they might not to raise rates because the Treasury is doing it for them. Interesting. This last thing here, though, this is the words to watch out for with this Fed talk. When you're watching TV or you're hearing these talking heads babble, if you hear them say, inflation is still rising, But know that you're about to hear a whopper. Okay? Because the key there is inflation still rising. Anyway, guys, that's it for the day. We appreciate your support. Tomorrow is going to be a massive day. We'll be here to bring you guys everything on CPI. We'll see where that comes in. It's going to be a huge day, guys. Huge. If CPI misses, the markets could have a rough day. If CPI hits, could be a huge rally. We'll see where it goes. And by when I say hits or misses, I mean, CPI, if CPI numbers come in below or well below what they're expecting, big rally. If CPI numbers, their economists miss and they're way off, well, like they were today, markets could be in for a rocky ride. And then you add in jobless claims, we'll see where that comes to. Anyway, it's going to be a great day. We'll be here to bring it to you guys. We appreciate your support. Until tomorrow, guys, take care. Thanks.